Good afternoon, everybody. My name is Michael Fedele. I am the CEO that specializes in fixing IRS problems for anyone, but especially high net worth athletes, entertainers, and people that have been in IRS jail for a long time. In addition to that, we are a tax firm, so we also work at getting people's numbers down as low as possible and getting you the best result possible. We are different in this respect. And by the way, I'm an ex-Price Waterhouse audit manager from New Jersey, and I'm an ex-Ernst & Winnie, before it was Ernst & Young. Kind of dates me a little bit, in New York City. So I was with two big four firms for 10 years. I've had my own practice for a little over 30 years. I've been at this for 44 years. I'm 63 years old. What makes us different is, starting with me, we take what I call aggressive, defensible tax positions. My profession is filled, laced with people that are lazy, that don't know the code, that don't know the regs, that don't know the tax court cases, that don't know the revenue rulings, revenue procedures, Internal Revenue Manual. And I've spent my life studying that, going all the way back to my Ernst & Winnie days, when I would spend hours in the tax library. I'm not a lawyer, but I can get more done with the IRS than any lawyer I know. Very few things go to tax court. Most everything gets settled before that. I've done more than 2,000 full field audits in my career. So one of the things that we do is we do offers in compromise. We consider ourselves one of the best at it. We have about a 98% success rate. All of these people here that you see, we knock their debt down. And we're going to share with you Annie's story. Is it up? And she was an OIC candidate. I'm only going to share one video, then we're going to talk about some real tax secrets that I want to give you before this is over.
My name is Annie Mitchell. I am a retired high school counselor. I had money in annuities from the Board of Ed, and I drew my money down thinking that they were sending my money to paying my taxes on the money. And for some reason, it didn't happen. Maybe I didn't ask the question if they were, but I just assumed that it was being taken care of, and it wasn't. And when I would leave other agencies, I felt gloom and doom. Okay, like, oh Lord. One man told me, oh, you don't have to pay this, just go on. I feel like, hey, I got to pay this money. And I don't know where I'm gonna get it from because I'm on a pension now. And I'm a cancer patient. With the chemo, the radiation was quite a bit. And I had bills up the gazoo. I was on my way home from church one Sunday, and I had my radio on to this talk show. And Mr. Fedele and Ms. Attorney Fenton was on, and they were talking about what they could do to help the community. And when I heard that, I wrote the number down and called Mr. Fedele the next day. It seems as if he knew how to work with the IRS. I was very confident, and plus I prayed a lot. So I felt confident that God was going to help Mr. Fedele fix this. I felt hope when I left here. You were able to give me a new lease on life, for one thing. I owed the IRS $167,000. You got my bill down to $500. And when he put that in, I said, well, I don't think he's gonna be able to do that, because $500 from $167,000, that was really unbelievable. But I kept praying. That's what I found out, and I believe about Mr. Fedele. He is one caring young man, and if he cared enough to work that hard to get me out of $167,000 to $500, I love him dearly. So I believe that Mr. Fedele could do it, and I believe that my Heavenly Father was working with him to get it done. It worked out for me because he worked hard on it. He did not miss a beat with what he was doing. And every time I came to see him, I was feeling more uplifted because I felt as if he knew what he was doing. If there was another Annie Mitchell, another Rose Marie, another anybody sitting out there with a tax debt, I would urge you to call Mr. Fedele's office and try and see if he would take your case. Because if you don't call him, you'll never know what he could do. I'm telling you, he is one of the greatest fighters for people who are having problems with the IRS that I've ever seen, and I've been to about 4. I came to him and he gave me hope. My name is Annie Mitchell. I would like to let everyone know that Fedele and Associates saved my life.
All right, so let me take a deep dive into this so you understand what we did, and you'll understand how we did things differently. So she came to our office, and with this kind of IRS debt, we evaluated whether or not she could do an offer in compromise, but she had some problems. First of all, when you do an offer in compromise, you have to assess what is called the reasonable collection potential, which means what you can pay the IRS. That is based upon assets and income. And in her case, she had problems with the asset side and a little bit with the expense side. So what she had was she had a house, and the house was in a land trust that her beneficiary was her daughter. So the IRS, under code and under the regs, does not recognize a land trust as something that is out of your name. Why? Well, because most land trusts are revocable. It means the grantor can revoke them and put it in her name. So the IRS, under statute, when you're doing an offer in compromise, even though you think it's a land trust and your beneficiary is your daughter, doesn't work. In addition to that, she had medical bills that she did have insurance, and she did have Medicare, and she had insurance with the state through her job when she retired. But she did have medical bills that she couldn't pay. So my strategy was going to be to change that land trust into an irrevocable trust. You might say, can you do that? Yes, you can convert a revocable land trust into an irrevocable land trust and keep the same name. Didn't change the name. So we changed the land trust into an irrevocable trust, which now under statute, the IRS recognizes cannot be added to your reasonable collection potential, meaning it cannot be added to the asset base that the IRS says you can pay them back on. That's what we had to do. So that's an example of an aggressive defensible position. Most accountants would say, oh, you have a revocable land trust, can't do anything for you. That's an example of how I have, through the years, tried to find a way to correct a problem so we could eliminate tax debt. And then on top of that, once we got that solved and the IRS eliminated the debt, we made an offer for $500, which they accepted. We then went to the hospital that she had about $60,000 in medical bills still, because they didn't cover everything for her cancer treatment. She had to pay some out of pocket. We then wrote a letter. She doesn't say this in the video, but it's part of the whole package we did. We wrote a letter for economic hardship to the hospital with a copy of the accepted federal offer in compromise, and they wrote her medical bill down to $0. So literally, at the end of the day, she paid $500 for all her problems. So that's Annie Mitchell. Client walks in my office, owns a pharmacy, and is a C Corp. C Corporation is a very special kind of corporation. Walks in, he was working with RSM, which is a nationally renowned accounting firm, like Price Waterhouse. Not quite, but very nationally renowned, with thousands of partners. He walks in and says, I came to you through a referral. I have $680,000 in federal income tax debt. I'm going out of business because I can't compete with Walgreens. I have a pharmacy in Chicago. What can I do? I'm on a payment plan, paying around $6,000 or $7,000 a month, and they want to up that to $12,000. And what do I do? I said, okay, I'm going to pull your transcripts. I got to become your power of attorney. The very first thing is we're going to do an investigation. And that's what you don't find. A lot of accountants don't do a thorough investigation. I pulled all his transcripts. I did skip tracing on him. I found out everything the IRS knows about him. In a case like this, I want to know everything the IRS knows about you before I even put one pen to a piece of paper or one stroke to the keyboard. When I invited him back in my office, and this is what I said: walk away from the debt. He said, what? Walk away. Wait. Am I going to jail? No. Walk away from your C Corp debt. And his question was, how the hell do I do that? Here's what we do. First of all, I have to figure out two things. Number one, was there any fraud involved in the closing of this business? The answer to that was no. He's just running out of business. He's going out of business because he has too much competition. The second question is, do you have any trust fund penalties? What is a trust fund penalty? It is because he had employees. It is a penalty that you get for payroll and for sales taxes in the state. When you do not pay the federal government the withholding taxes that you took out of employees' pay. If you have a trust fund penalty, that will get attached to the Social Security number of the responsible party on the employer identification number application. So something for you to know. When you put your name, and by the way, you used to be able to years ago, you used to be able to put a business as the responsible party. You can't do that anymore. It has to be an individual. The IRS got smart about that. So if you're the responsible party, if there's unpaid payroll taxes, at some point in time, you will get the amount of payroll taxes that should have been paid to the IRS, that's federal income tax, Social Security and withholding, attached to your Social Security number. Okay? And that is essentially called a trust fund penalty, I believe under Code Section 6662. It's a civil type of penalty. He didn't have any. He was fully paid on his payroll taxes. He was fully paid on his sales taxes, which is also a trust fund penalty. If you don't pay your sales taxes and you're in a business of paying sales, you need to know if you don't pay your sales tax, you can't just walk away. At some point, if you're the responsible party for whatever state you're in, your Social Security number is going to get attached to that debt. He had no issues. So I literally said, under statute, the IRS cannot attach your Social Security number to C Corp debt. He still didn't believe me. And I had to go into my office and show him code. He finally trusted me, and I gave him examples of clients that I had done that in the past for. He felt comfortable. And just recently, and I said, you're going to get notices for the next 6 or 7 years. If you want, I'll put them to a P.O. box so you don't panic every time you see them coming in your mailbox. Let's do that. Let's change the address to your company. Let's put them to a P.O. box so you don't get them. And he just called me and said, Mike, I absolutely cannot believe this. I've had no issues for 7 years. We pulled the transcripts and all the debt is written off. So if you have a C corporation, and you're running out of business, under statute, you do not have to pay federal income tax C Corp debt. You can walk away free and clear. Okay, so that's the C Corp debt. And also, he walked away from his state debt too because he had no trust fund issues with the sales taxes. That takes a little more in the state of Illinois, but he did that as well. So now, let's get into a little bit of this. What is step up in basis? It is when you pass away, or someone passes away, under statute, and by the way, this is supposed to go away under the new tax code that's going to happen. You can step up the basis to property to fair market value at the date of death. For example, if your mother dies and cost basis of that property was $30,000 20 years ago, and now it's $700,000. I actually had a case where a lawyer put the cost basis in a estate tax return. It should have been a trust anyway. It was a trust. He made the mistake of putting it in a 1041 estate tax return, but he used the basis of when it was originally purchased plus some improvements at around $120,000. She came to me. She said, "I can't pay this, and by the way, I've spent all the money that I got in inheritance, so I can't. He's making me pay around $300,000 on this plus penalties." And I said, "No, he missed a step up in basis. You can step up the basis of that property to $750,000." We did that. Her debt was zero, essentially, because it was he had just passed away. So actually, the fair market value was even. There was no gain at all on the sale. Okay. She sold the property. When she sold it, was no gain or loss on the sale. Professional day trader status. So many people are reporting only up to $3,000 capital losses on their tax return for equity transactions. Almost everybody I see. There's a few that don't do it. Do you know that if you are a day trader, you can report unlimited losses on your equity transactions, whatever you're in, interest rate swaps, it doesn't matter. Derivatives of any sort, puts and call options, it doesn't matter. If you are a day trader, and a lot of people are actually doing enough day trading that even though it's not their principal profession, in terms of quantity of day trades and the volume of the money, they qualify as a day trader. And what can you do? There's two issues here. Number one, you can report all of your expenses on Schedule C. You're like, what? Yes. Under code, you can report all of your losses under Schedule C. What is that? Home office deduction. If you're traveling, your computer expenses, your cell phone expense, every expense that is related to you being a day trader. What are people typically doing? They're just reporting capital losses under Schedule D up to $3,000 and carrying it forward. No. On top of that, you could set up two different accounts. I recommend if you're going to do this, you set up one for long-term capital gains, which is only subject to the 20% capital gain rate on long-term capital gains, and then have another account with your losses in it, and you're reporting the capital losses unlimited. 10, 20, 30, 40,000, it doesn't matter. You can report unlimited losses if you're a day trader. If you want to talk to me more about the qualifications, but basically that's what it is. As long as in frequency and volume, it's more in a facts and circumstances case. On top of that, you can also elect what's called mark-to-market election. And by the way, you can elect day trader status. You can elect day trader status without doing the mark-to-market election. A lot of people don't know that. What is the mark-to-market election? It is, at the end of the year, you look at all your equity positions as a day trader, and you assume they are sold at the end of the year. You take them at fair market value. You see, what do I have gains or losses, and you report that on your 4797, which is gain. You don't report it on Schedule D. Well, you report it on Schedule D through the 4797. But the other, if you're a day trader just reporting regular gains or losses, you're reporting on the 8949. But if you're a day trader on mark-to-market status, you report it on the 4797. That flows through your Schedule D. And you can take also unlimited losses. And also unlimited gains, of course, as well, but unlimited losses, and that's the key. So many people are not even aware that you are not boxed into the $3,000 capital loss limitation that so many people think that is their only option. Professional gambler. Do you know that you can be a professional gambler? Typically people, we had a client that walked in, he was a professional gambler. I'm going to open this up for questions. There's no way I can get through all of this. You can elect professional gambler status. You can take unlimited losses. Come and see me at my booth, B242, if you want. I'll explain that to you. Unlimited losses. You're not only subject to report them on the face of the 1040 and then report the deduction on the Schedule A. You can go right to Schedule C. And one of the reasons you want to go to Schedule C is because if you have state withholdings, which you typically do in gambling losses, you can get a lot of those withholdings at the state level back as a refund. We just had a client that in Illinois, he just got back two years, $28,000 and another $26,000 in the state of Illinois refunds when we elected professional gambler status. That would not have been possible if he didn't elect the gambler status and reported it merely on the face of the 1040 and the deduction on the Schedule A. C Corp debt walked away. I talked about real estate professional, unlimited losses. Do you know there's three types of real estate people? There's a real estate investor. That's people that are, have a couple of properties and let's say they're reporting some losses. You're subject to loss limitations on that under Code Section 469. You can be a real estate developer. That's somebody who buys land, property, and develops on it. You can only report gains and losses when that property is placed in service. That means when you finish it and you start renting it or you put it up for sale. There's another status, and that is a real estate professional. That includes everything from real estate agents to people flipping properties to people renting properties. As long as you spend 750 hours in total in total for the year. That's only 8% of the hours. People don't think 750,000 hours is a lot. No, it's not. It's just 8% of the hours for the year. By definition, you qualify for professional real estate, a real estate professional status, and you can take unlimited losses. I just had a client that walked in, his tax accountant just walked in this year. He's sitting with 1.7 million of passive loss carry forwards, but all he did was real estate. He's a retired guy. I said he should have been reporting these losses all along. What did I do to fix it? I couldn't go back to prior years. What did I do to fix it? I capitalized those passive loss carry forwards rather than turning them to carry forward, because you can only take the loss when you dispose of the property. I took them, I capitalized them, and I began to depreciate them. So he's going to get depreciation of 1.7 million going forward 27 and a half years, because it was residential real estate. So you have to be creative. And there's another example. Once again, I take aggressive, defensible positions. Most accountants would have said, oh, I can't touch those losses until you dispose of the property, which could be 20 years from now. So that's how I and my team strategize. A brief snippet of how we strategize to get people out of IRS debt, to get their taxes as low as possible, and to help them live a great life. Any questions? I'm turning it over to you. I've got 5 minutes. Anybody have any questions? Any questions? If not, I might just give one more example. Okay, I'll give you another example. I had a crypto trader that walked in my office this past year. I don't want to give examples 10 years ago. I like giving current examples, okay? Crypto trader came to us through a referral, because I do taxes for other crypto traders. And I have the copy of the thing. I won't show you. If you want to show it, I crossed the name off and social security number so you can't see it. It's almost too hard to believe. He walks in, he owes $513,000 in federal income tax debt for 2021. And he had a law firm do it. And they were doing 2022 and 2023, but he didn't file those yet. He says, Mike, I came to you through a referral. What can you do? He showed me all the crypto platforms, the spreadsheets they prepared. I said, here's what we have to do. We have to do a full accounting and bookkeeping from your financial statements. Why? Why don't you just take the spreadsheets? Because that is going to help me find out what really happened to your money, how much you really made. The crypto transactions, by the way, when I went through it, they assumed that this is a law firm now, and this is why you don't go to law firms typically to get your crypto done. They reported every deposit as income. So I said to him, let me ask you a question. Did you ever just use one crypto for another? Did you ever just trade on the platform, but you didn't actually buy something? Yes. Okay, that's not income. Did you receive a loan? Yes, I did. That's not income. Did you loan money to somebody and receive a loan repayment? In fact, I did. Well, all of those things are not income, even though they are deposits on your bank statement. So we eliminated, and he had thousands of crypto transactions. We eliminated all of those non-income transactions. And there was actually another person who made an equity contribution into his business that became a part owner. That was about $125,000. So we extracted out and eliminated all the non-cash crypto transactions, if you would call them, because he did everything through crypto. And we eliminated that tax debt from 513. We just got the amended return in 56,000. I knocked 513 down to 56,000. I happen to have done that one, even though I had one of my top accounting people do the spreadsheet. I had to really work with that amended return myself. But that's almost $500,000. So that is an example of something we just recently did for a crypto trader. Let me see what time it is. We still got a few minutes. Anybody have any questions? Another person we'll give an example of. One of the people, Gail, over here, we saved her $80,000. How do we do that? It's a little offering compromise, but completely different. She came to us and she said, the IRS sent me a $80,000 tax bill. Why? Because she got a 1099-C, which is taxable income. What is a 1099-C? She was in a foreclosure. And when you are in a foreclosure, even though the bank, there's two sides to this coin, even though the bank writes your debt off, And most banks have to under state law. I don't know if you know that. Like that, the only thing they can take under state law, most states are like this, I can't say every state, is your house. Your house is the collateral for the loan. So under state statute, most states cannot they cannot sue you for the difference between your mortgage and the selling price of the home. They just have to let you walk away. So you're happy. You walk away from the state tax, from the mortgage company's debt, but the federal government under statute has to charge you income tax on that 1099. The mortgage company or the bank has to file a 1099 for the difference between what the selling price of the house was and your mortgage debt. So in her case, it was $230,000. She had around $500,000 mortgage, and whatever she sold it for, $270,000. So that's $230,000 she had in federal taxable income that we had to do something with. And under two exceptions that are allowed for a 1099-C, qualified principal residence debt, which it was, we eliminated that $230,000, and under insolvency exception. The insolvency exception, what is insolvency? People are like, is it bankruptcy? Not exactly. Bankruptcy is your inability to pay debts when they become due. Insolvency is simply your total worldwide assets in your life are less than your liabilities. And in her case, they were. So her total liabilities exceeded her assets, and she qualified under two exceptions. We filed the amended return, and she owed nothing. So we had a number of people we had OICs for that were like that. We have another pastor here who, let me give you an example of Riley. Riley came into our office, and let me give a better example. We had a client that came into our office who was a music producer, well-known music producer. Not even going to share his name with you. He says, I got your name through a referral. I hear you're the best guy to do this with, and so here it is. I got something from the IRS for $335,000, a notice. But I never filed a tax return. I said, I already know why. Pulled his transcripts. He was in SFR. What is SFR? Substitute for return. The IRS went ahead because he had 1099s attached to his Social Security number. He was getting paid personally. He didn't have a business. He had an LLC. He wasn't using it, though. So he got 1099s in his name, under his Social Security number, and then they filed an SFR. Not only for 2021, I said, I went back to 2015, and they're about to give you substitute returns for about 8 other years. They did on your transcript, what's called review of unreported income. It's not at that point yet. They did file one for you already, and they're about to file 8 more. And when I calculated everything that he was going to owe, forget the 335, you're going to owe about 1.9 million, including the late penalties, late filing penalties, late payment penalties, everything. So you have a window right now, I told him. He actually hasn't paid our firm. This has just happened. You have a window. They're going to levy you at some point. They're definitely going to lien your Maserati that you got and your Lambo that you got in cash. They're going to lien that, and they're going to lien your house, possibly seize it, possibly, if they could prove that the funds that you used for that should have been used to pay IRS debt, possibly. But I know how to get you out of that. But that's not your biggest problem. Your biggest problem is once you don't answer to this levy that you're going to get levied, they're going to come after your customers, and they're going to take the money that you're going to get from your customers, let's say it's a $50,000 payment, and they're going to suck it right into the United States Treasury. And he says, what? Yes, sir. You have a window to fix this. And if we don't, you are going to be in IRS jail for a very long time. So we're waiting for him to make it down. And you want to know what this costs our firm? So I'm knocking his debt down from 1.9 million. I looked at all his bank statements, by the way, sent them all in, and I gave him a rough estimate. I can probably knock this down because he's got all these traveling expenses. He got a lot of things he bought, probably around $250,000 for 8 years. And my firm will charge him $100,000 for that. That's what it costs. So he says, that's a deal. So we're just waiting for him to pay us and get started on it. So that's the kind of stuff that we deal with, and we know in Miami, I know in Miami, because I did 2 former NFL football players in Miami as well. I knocked one former NFL football player, keep them nameless, they wouldn't do videos, they wanted to keep everything private, as you can imagine. One of them I knocked, he owed 1.6 million, I knocked that down to 300,000. in a federal tax audit. The other one owed 1.5 million. They were friends, former NFL football players. So they weren't working with their agents anymore. They heard about us through a referral from a high net worth guy in Las Vegas who we did a marketing programmer who we knocked down, and I got his parents out of asset seizure. And we knocked him down to around 450,000. So each of them we knocked around $1 million off the federal tax debt. I do appreciate you all being present. If you have any more questions, you want to talk about your tax issues, we do have an office now in South Beach. And if you have serious tax issues that you need fixed, like if you're in, mission critical, DEFCON 5, come to my office and I might be able to meet with you. Thank you very much. Have a great day.